for me, what got my attention was you said it's not uncommon that you can help a financial advisor save $30,000 a year in taxes. And for me, I immediately say, okay, what does that look like over 10 years?
Yeah.
I mean, $300,000 plus or minus invested into the business or invested in some other way, or just having that dry powder.
Yeah.
So as a lifelong planner listening in, imagine if you optimized your approach to tax. So is there anything else that you see in terms of patterns with the advisors? Liberation, there's got to be some qualitative benefits from finding these little, opportunity leakages and things like that. I'd love to hear some of that.
Yeah. And I'd say, my perspective is people always say, don't let the tax tail wag the business dog. And my perspective is, in order for me to do well with the tail, I really have to get the whole dog, right? Like you don't want a vet that only knows how to treat the tail because it's all kind of one thing. So I find for a lot of the tax, advice that I give and a lot of the advisors that I work with, the main value that they're taking away is more like the peace of mind, because I think the way that the relationships typically work with tax professionals is they're very passive and they're very, you bring me your paperwork, I'll file your paperwork and tell you the horrifying check you're going to have to cut to the IRS. And I think for a lot of advisors, a lot of the value that we bring in the relationship beyond just the tax savings is you're not having to manage this function in your life anymore. That there's somebody who's like, I will proactively go into your QuickBooks and pull the reports and do forecasting and reach out and say, hey, I saw you, this is when you're getting your big quarterly checks. I went in, took a look at what's in there. Is it all updated? Okay, great. Ran a new forecast for you. This is what we're looking at. It's on trend with what we were thinking. Everything's still good. Any changes? Like that kind of a relationship versus, passively figuring it out after, or how am I going to pay for this $100,000 of taxes or just any of those kinds of things. Like it actually, what made me frustrated was that in a lot of these typical relationships is like all of the power that I have as a tax professional to help people actually make changes to improve their situation is behind this compliance requirement. And if you can shift it where it's broken out of that and really compliance is the end of the relationship, after we've done all our work during the year, then we do the tax returns. It unlocks that value for the advisor for them to not have to be, they don't have to be worrying about it. And they know it's not in their, even if it doesn't take them a lot of time, it's not in their headspace as another plate they're having to spin because they're spinning a ton of plates. And this is one where it's not a value add for them. It doesn't drive revenue for them. Like it's just a distraction and it's an anxiety creator, like the bogeyman that's under the bed. And it doesn't have to be like that.